it will be activity number 3. It will be a company income statement. Okay. So when we look at our book quickly, we've got what they want us to do is they want us to calculate the cost price, the accumulated depreciation, and the carrying value. So we'll refer to that information B, on the adjustment page in your workbook, and then in the answer book, we'll go there. Right? So let me just first explain what I've did so far quickly, just to put you in the picture. We're going to come back. This will be the information. All I did was I just separated the income statement with the sales, cost of sales, to the gross income. Right? Then the second page, what I did was I just listed the operating expenses right down to the net profit after tax. And then the third page is going to be where we'll do the note for the fixed assets. So I will be jumping between these 3 pages just to make sure that you will understand what we're doing. So please, I need you to follow carefully so that you can just see. I'm just showing you 3 different pages, but it will be in your answer booklet, which should be easy. Okay. So the first thing they want us to do is they are talking about we need to go to information B and find out the questions about the fixed assets or the tangible assets. They're giving us land and buildings, they're giving us vehicles, and they're giving us accumulated depreciation, all at the beginning of the financial year. Okay. So when I look at our answer book for the land and buildings, okay, where we go. They've got land and buildings 11 million at the beginning of the year and 10,200,000 at the end of the year. Okay. So clearly you can see that the land and buildings has decreased. But then also they have the heading movements, and they have 3 lines blank, which we should fill in first of all. Okay. So the first line that we should know by now will be the additions. So we're filling in the additions. Right. Then we fill in the second line, disposal at carrying value or disposal at book value. In the third line will be the depreciation. Okay. This particular question could also come in as a separate question in the end of the year. Okay. But for now, this question forms part of your income statement, and we should have mastered this already in grade 11. So we're just testing a bit of grade 11 work. Like I said again, this could also come in as a separate question at the end of the year. So let's just have a look quickly. We're looking at 11 million at the beginning of the year and 10,200,000 at the end of the year. So clearly we didn't buy, and as we know, there's no depreciation on land and buildings. So the only thing that could have happened was we could have sold or we could have disposed of land and buildings to the value of 800,000. And that 800,000 will then go in brackets because 11 million minus 800,000 gives you 10,200,000. Okay. Then also for the vehicles, they give me the cost price at the beginning and the accumulated at the beginning. So I need to calculate the carrying value at the beginning of the financial year. So all I do here, I take the 900,000 minus 387,600. I will get 512,400. Those are all marks that we can fill in without having a look at the adjustments. Okay, so now we need to go to the adjustments because these are the things that we'll have to go and calculate. Okay, so what do they say? It says a vehicle bought on the 1st of July 2015. Okay, was sold for cash at a profit of 5,000 Rand on the 31st of December. Okay, so in other words, we sold a vehicle, but that particular vehicle that we're selling was bought on the 1st of July. Okay, then the question is, calculate the following with regard to the vehicle sold. Okay, we must determine what is the cost price of the vehicle that we sold, but that vehicle that we sold was bought on the 1st of July 2015. Okay. So if we go to the answer booklet, now whatever we're mentioning now about the vehicles, we'll be needing this one as well. So we'll be needing the fixed asset note, but also we need this to answer the other one, which is this one over here. Okay. They want us to determine what is the cost price of the vehicle that was sold. So if I'm looking at this, I see the cost price at the beginning of the year was 900,000. So I'm going to start with 900,000 at the beginning of the year. Then in the information, they tell me that I bought a vehicle to the value of 200,000. Right. So that 200,000 will be reflected in my fixed asset note later as an addition. But then also, they're giving me the closing balance of the cost price at the end of the year of 810,000. Okay. So when I get to this note, by my additions, I can add 200,000. Now that was bought on the 30th of June. They tell me that in the information. Okay, so now I've got the 900,000. I'm adding the 200,000, but I'm getting 810,000. So when I determine the cost price, 900,000 plus the addition of 200,000 minus the 810,000 that I have left at the end of the year, then it will tell me what is the cost price of the vehicle that I sold during the year, which is 290,000. So the cost price of the vehicle that I sold during the year was 290,000. I'll just put in the 290,000 over there. Okay. So we'll just recap quickly. 900,000 plus the addition of 200,000 minus the cost price at the end gives me the cost price of the vehicle that I sold. Okay. So for vehicles, I just want to see. Right, there we go. There's the 900,000 plus the addition minus what we have left at the end, which means the cost price of the vehicle was 290,000 that we sold. Okay, so I'm just writing that 290 over there, just in case we're going to come back to that 290 also. Okay. Right, so what's the next part that they tell me there? Then also, the second part of the question is we must determine the accumulated depreciation for the vehicle that we sold. Okay. Now we know the cost price is 290,000. So the accumulated, they will tell me when did we buy that particular vehicle. The information says that we bought the vehicle the 1st of July 2015. So my year 1 goes until the 30th of June 2016. So for that particular year, I had to depreciate the vehicle at 20% per annum. So if I do it on the calculator, now because the vehicle is new and it's in the first year, although the question says diminishing balance, in the first year, you have to write it off on the cost price. So I'll just have to go 290,000 times 20%. So in that first year, I wrote off depreciation of 58,000. Now, that was in the first year. That was in the past, right? This vehicle was sold on the 31st of December. So in year 2, which starts the 1st of July 2016, and it goes only until the 31st of December. Which means in the second year, I only had the vehicle for 6 months. So now, before I'm selling the vehicle, I'll have to write off depreciation only until the 31st of December 2016, and then I'll have to write off the depreciation only for 6 months. Now in my second year, then the method of depreciation now kicks in. Okay, the method of depreciation is now diminishing. So now you have to go take the 290,000, which is the cost price, minus the previous year's accumulated, which was the 58,000. Then the answer of that, you multiply with 6/12 times 20%. Okay, so let's just see what answer we get there quickly when we do that. So let me just repeat. 290,000 minus the 58,000. The 58,000 is the previous year's depreciation, which becomes the second year's accumulated. Multiply by 6/12 because we're not having the vehicle for the whole year. We sold it in December, and the percentage is 20%. Right? So from the calculation over there, we should be getting an answer. Right? Anybody? Yes? Okay. Here we go. The answer for that amount is 23,200. Okay, 23,200. But the question asks, calculate the accumulated depreciation of the vehicle that was sold, which means it was last year's accumulated plus this year's depreciation. So I just have to add those two. So it will be the 58,000 on the calculator plus the 23,200, which gives me 81,200. Okay, which is that one, and added that one, which I will take over there. Okay, 81,200. Then the third part of that question says calculate the carrying value. So as we know, carrying value is cost price minus accumulated depreciation. Cost price is 290,000 minus the 81,200 of the previous answer. Then we're going to get 208,800. 208,800. Okay, so now we can use some of these information, if not all of them, to help us to complete the fixed asset note. Okay, so when I look at the fixed asset note, it says disposal at carrying value. In other words, what is the carrying value of the item that we are selling? And that information is over here, which is the 208,800. So that information I can fill in, 208,800. Put that in brackets. Because we're getting rid of it, it's getting sold. Okay? So we'll come back to the depreciation later, and then we'll complete this part over here. So far, learners, what we've did was we've answered the first part of the question, which was determine the cost price, determine the accumulated depreciation, and also determining the carrying value of the item that was sold. So the answers will be 290,000, 81,200, and 208,800. Okay, so those answers will also be reflected onto your fixed asset note, like we have it over there. We'll come back to the calculation of the depreciation, and we'll come back to the calculation for the accumulated, and then we'll be able to complete that note. So let's just move this aside quickly. Now we just go on to the actual thing, which is the part of it now, and that will be your income statement. Okay, so what do they ask? Okay, it says also that, I see that depreciation is written off at 20% per annum on the diminishing. So now we might as well then complete this fixed asset note, because we can determine the value of the old vehicles and the value of the new vehicles. So we know that the value of the new vehicles is 200,000, but that vehicle was bought on the last day. So there will be no depreciation on the new vehicle. So it will only be the depreciation on the old vehicle together with the depreciation on the new vehicle for 6 months, which was that answer over there. So when we get the line for depreciation, right, we're going to say for the old vehicle, the total cost was 900,000. But we're taking away 290. Right, so what's left? So the old cost is 900 minus 290, which gives you 610. Now because it's diminishing, I'm going to need that. Because it's diminishing, I will need the accumulated depreciation of the old. Okay. So we're starting with the current accumulated, 387,600 plus 23,200. That's the depreciation on the item that was sold, minus the total accumulated of the item that was sold, which in this case was 81,200, which is that figure over there. Right. Then we get an answer. So we're going to go 387,600 plus 23,200 minus 81,200. It gives me 329,600. Okay. Right, so what do I do with this information? Okay. That is the cost of the old vehicle, and this is the accumulated that belongs to that cost of the old vehicle. So now when I do the calculation, I've got to go 610 minus 329,600 gives me an answer of 280,400. Gives me an answer of 280,400. And I multiply that by 20% because now I have that old vehicle for the whole year. And that will give me an answer of 56,080. Okay, so this is the depreciation on the old. That's the depreciation on the old. That's the vehicle that's remaining. I just need to add the depreciation on the vehicle that was sold, which was 23,200. And I'll get my total depreciation over here. That's 280. It gives me 79,280. So that information, that will go to my income statement as depreciation for vehicles. Okay. To see what they say. They say, welcome to Kulani High School in the Eastern Cape. So I hope you are following. So you can make sure that you have your answer booklet and then you follow carefully for the calculations, because some of them can become a bit cumbersome and difficult. Okay, I thank you very much for tuning in. Please make sure that you know how to calculate. Let's just recap again quickly. I had 900,000 at the beginning. I'm selling the cost price of 290. So I have the cost price of the remaining vehicle is 610. Then also, the accumulated I want to determine of the old vehicle. So the accumulated at the beginning was 387,600 plus the depreciation for the 6 months, which we calculated from the fixed asset note, which was over there. Right. Then I minus the total accumulated, which was the answer of the accumulated of the item that was sold, to get to 329,600. Then I go the cost price of the old minus the cost price of the old, accumulated of the old, gives me the carrying value, multiply, I get the 20%, and then I just add the two together to give me the total depreciation. So this 79,280 will later on be reflected in my income statement. So when I do my income statement later on, I can have the item over here, depreciation. And that was the 23,200 plus the 56,080. Right, and that answer was 79,280. Okay. So now when we go to the adjustments, it should be easy because we already did adjustment number 1 already. So everything with adjustment number 1, that one B1, that was completed. The only information we can still just take from there, we don't have to determine the profit or the loss on sale of asset. It is given already. So the profit on sale of asset of 5,000, that is given. So that information we can take straight to the income statement. So when we look at the income statement, that's the top part. Right, just remember, as I said, I just cut mine in 3 just to make it a bit easier. We're going to have sales over there. That will be your first line. There's cost of sales. That will give you the gross profit. Then it's other income. It will be fee income. Then below that, the next income, profit on sale of asset, which is 5,000, which was given, okay, with adjustment A. Here we go. Right, so let's see, what do they say? This says the second adjustment. A credit note for 900 Rand was issued on the 28th of June 2017 to a debtor for poor sewing services rendered to her. Okay, so which means it will affect the fee income. The debtor will get a reduction in the amount that they owe us, and also our fee income will decrease with the same amount. So when we get the item for fee income, which will fall under the other operating income, we have to take away the amount that was given to the debtor. Okay? So as we stand with fee income at the moment, from the trial balance, it's 145,400. I have to take away the 900, which I'm giving for the poor services, so I have to deduct, and I will get 144,500. Okay, so it will be the 145, that's the amount in the trial balance, minus the adjustment, will give me the 144,500. Okay, at least that particular adjustment was done. Let's see what else we're talking about. Right, the third one, it says the tenant owes the rent for June. Okay, so we're talking about tenant that owes us. That means the item in the income statement will be rent income. So we will have an item over here, rent income. Okay. So the amount in the income statement or in the trial balance is given. It's 172,500. Okay. Now learners, this calculation can sometimes become a bit difficult, so you need to pay special attention to this one quickly. Okay. So let's just see, it says 172,500, that is the amount that the trial balance is giving us. Okay, so let's just show this calculation quickly. Okay, the 172,500 says the tenant owes you the amount for June, so they're owing June. Which means you only received 11 months. Now, if nothing else was said, then all you had to do to get the 1 month that they still owe you, take the 172 and divide it by 11. But it says that the rent increased in January by 1,500. So in other words, from the 1st of January, there was an increase of 1,500. So from January till the 30th of June, that's the 6 months, but they never paid for June. They only paid until the 31st of May. Because June is still owing. They owe you 1 month. Okay? Which means from January till May, which is for 5 months, they received the extra 1,500. So this 5 times 1,500 is causing that 172,500 cannot be divided by 11. So 5 times 1,500, that gives you 7,500. Okay. So to get the equal, I need to take away the amount that causes the inequality. So we go 172,500 minus 7,500. Then the answer of that I can divide by 11, because now I will have 11 equal months. Okay, so it's 172,500 minus 7,500. That will give, and then I can divide by 11. So it's 172,500. 172,500 minus 7,500 gives you 165,000. Divide that by 11. We're going to get 15,000. Okay, so what's the 15,000? The 15,000 is the rent before the increase. The 15,000 is the rent before the increase. And remember, the rent increased by 1,500. So I need to know this portion here, is it the rent before the increase, or is it the rent after the increase? So the amount for June is clearly the amount after the increase, because the increase happened in January. That means I will have to add an extra 1,500. So I'm getting 16,500. This will be the amount after the increase. So the tenant still owes me 16,500. So when I come back to the income statement, okay, I have my item rent income. Then I need to add 16,500 to the existing. So that was 11 months plus the extra month that he still owes me. So I will get 189,000. Just check. 189 it is. Just calculator. So it's 172,500 plus 16,500. 189,000 it is. And as you can see, that block is done. So we can just add that 5,000 plus the 144,500. You get a total of 338,500. Okay. So let's see if we can complete the top part. When we know the top part of the income statement is done, then we can go on with the bottom part. Okay. But that was adjustment number 3. So all the adjustment number 1, 2, and 3 are all done. So now we just have to look at the bottom part, just see in the information, what do they mention, anything about sales. There we have the sales figure, 2,892,000. And there's a figure of debtors allowance. So we have to go take the sales minus the debtors allowance. There's no other adjustment for those, so those figures goes as is straight into your income statement. So when we get to the top line of the income statement, it's 289 to 200 minus the 52,000. Okay, so that will be the sales, that will be the debtors allowance. Then we can get an answer, then we can complete the top part, then we can get the gross income, then we can move along. Okay, so that was that. You can see where is those. Here we have the second part where we are. So what was the net sales after we've taken away the debtors allowance? Was 28,40200. Okay. Then we can determine the gross profit, which is just the net sales minus the cost of sales, which was typed in already. So that will be 1,348,000. Then we can add that too. We add the gross profit plus the total of the other income to give me a total for the gross income, which will be 1,686,500. Okay, so we have a total of the gross income, 1,686,500. But I see in the answer book, they have a total at the bottom on the line where it says, let's just do it this way. There's a line there where it says operating profit. And the operating profit is the gross income figure that we have just calculated now, minus the total of the operating expenses. So in other words, 1,686,500 minus this total over here will give me 781,500. So now we just do the opposite. We take the gross income minus the operating profit, and then we can get the total of the operating expenses. So if we do that, we're going to go 1,686,500 minus 781,500. I will get 905,000. That will be the total of my operating expenses. So in the event that we do have a missing number, then at least we know our operating expenses total is correct, because that minus that gives me that. Or in this case, we have to calculate the 905. So it will be 186,500 minus 781,500 gives me the 905,000. Okay, now we can move along. Now we have the top part of the income statement fully completed. We've done everything over here. So that part is gone. We don't have to worry about that anymore. And we can see that we already did adjustment number 1, 2, and 3. So the only thing we have to worry about will be the next one, which is the audit fees. So audit fees is typed in already. The total that's given in the trial balance for audit fees is 50,000. What does the adjustment say? It says audit fees of 23,000 was payable to the auditors after receiving the report, which means it is accrued. All we have to do, we have to add. So it will be 50,000 plus 23,000. That gives me an answer of 73,000. So it's 73,000 for audit fees. Okay. Then the next adjustment, they're talking about the trading stock and they're talking about consumable stores on hand. So all we have to do, we have to look for trading stock in the trial balance. Currently it stands at 325,000. Just want to have a look at it quickly. Trading stock, 325,000. The adjustment says that the amount on hand is 315,000. Okay, so the stock in the books is more than what we have on hand, so there will be a deficit of the difference. So the item that we have to fill in the income statement will just be trading stock deficit. And that will be 325,000 minus 315,000. Gives you an even answer of 10,000. Okay. In the next item, they're talking about consumable stores. The amount in the trial balance is 104,700. And the adjustment says we have 4,000 left, so we just have to take away 4,000. That gives you 100, 700. Okay. It was fairly easy, that adjustment. Okay, so 1, 2, 3, 4, 5 is done. Looking at adjustment number 6. Okay, it's just plain salaries and wages. Let's just have a look at it and see what it says, and then we go from there. Okay. Right, so number 2 is done, number 3 is done, 4 is done, 5 is done. We're looking at 6. Okay. As an example, it says that an employee who has resigned, he no longer works for us. Right? When he's no longer part of the company, was erroneously included in the salaries journal, which means we still had him on the books, but he wasn't supposed to be there. And then they're giving us his details. Okay? Which means his gross salary and the contributions was added to salaries and wages, as it says at the bottom, and these figures are all included in the trial balance. Okay? So the item we're going to look at is salaries and wages. But the first thing we must do, we must get the person's or the employee's gross salary. Okay? So they're giving us the net, and then there's deductions. So all we have to do in order to get the gross, I take my net and I add the deductions to get the gross. Because normally it's the gross minus the deductions to give me the net. So now I have to work in reverse. So I'll just take the net, add the deductions to get the gross. So it's 18,375 plus 4,500 plus 1,875 plus 250. That gives me a total of 25,000. So the person's gross salary of 25,000 were included in the salaries and wages, and it wasn't supposed to be there. Okay? So we have to come back to that. Then also it says the company contributes as follows. For pension, 10% of the gross. So 10% of 25,000, it's 2,500. And also for UIF, they contribute on a rand for rand. What that means is whatever was deducted, the company also contributed. So the company contributed an extra 250, exactly the amount that was deducted. Okay. So what happened? The contributions are debited to salaries and wages. So not only is the gross salary of 25,000 included in the salaries and wages, and the 2,500 and the 250 was included by mistake, because it says erroneously, because the person has resigned. Okay. So when we look at the income statement, it will be salaries and wages. Okay, just remember, you are not allowed to abbreviate. Then we'll start with the total that was given. Okay, so the total in the trial balance for salaries and wages, that total is 288,050. So we're starting with 288 and 50,000 minus the 25,000. That's the gross. Minus the 2,500 and minus the rand for rand 250 for the UIF. Okay, so if I go 288 minus 25 minus 2,500 minus 250, we're going to get 260,300. Yes. Okay, here we go. Right, so that adjustment, it looks a bit difficult, but in the end, it's quite easy. Right, then the ones, right, that will be number 6. And then number 7 is going to do with the income tax at the bottom. So now we just have to fill in the ones that didn't have adjustments. But remember, we have the total already. Oops, I saw there's a line there for salaries and wages, so that 260 should actually go there. So it looks like we might be a line short. We can sort that out now. Right, so what goes over there? The items that don't have adjustments was directors' fees of 375,000. And I just need to squeeze it in over here. Directors' fees, 375. Also bank charges. And the bank charges amount was 6,720. We've got the depreciation, we've got the trading stock deficit, we've got the consumable stores, we've got the audit fees, we have the salaries and wages. We just went to place the salaries and wages in the wrong place. But we have the director's fees and we have the bank charges. So if we total all of these, it should come to a total of 905,000. Okay. And as we move along, at the bottom part of the income statement, it's all blank. So learners, grade 12, we need to make sure that we understand. So the next line will be interest income. Then it's profit before interest expense. Then it's interest expense. Then it's net profit before tax. And it's income tax. And then it's net profit after tax. So let's just see what they give us. Adjustment number 7 talks about the interest expense. Adjustment number 8 talks about the income tax. It says the income tax is 30%. So that is 30% of the amount before tax. So the amount after tax will be 70%. Okay, let's move along. Let's see what they say. Adjustment number 7 says it's all about the loan. So let's just slide the loan in. Let's just see what happens for the loan. But it says details of the loan statement received from K Bank shows the following. It's 665 at the beginning. Then it says repayments made was 103,200. So then it says interest is capitalized, and then also that part, a capital amount of 50,000 will be paid in the next financial year. That will be the short-term loan in the balance sheet, which we don't have to worry about now because we're just concentrating on the income statement. Okay, so it's just an easy calculation. So 665,000 minus 103,200 gives you an answer of 561,800. That is now before the bank added the interest. Okay, so let's put this on a piece of paper, then you can see it much better. Okay, here we go. But the loan at the beginning is 665,000. The repayments was 103,200. Put that in brackets. So the answer of this comes to 561,800. Then the interest must still be added, and we got an answer of 652,000. Now all we have to do, we have to calculate the interest. This will be the interest expense that will go to the income statement. Okay, so we just have to do We take the 652 minus the 681. The interest comes to 90,200. So that's 90,200, which is the interest. So that figure, 90,200, that will go to your income statement as interest expense. So when you look at the income statement, interest expense, 90,200. Let's go in brackets. There shouldn't be a block here. This 90,200, that's for interest expense. Okay. Then it just says there's interest income of 3,500. Okay. Now we can add. We take the 781,500 plus 3,500. Give me 785,000. So one more zero. Take away the 90,200. Gives us an answer of 694,800. Right. What percentage of that? 30%. So let's go to 30% of that. So it's 694,800 multiplied by 30%. I get the income tax amount of 208,440. Okay. Then the amount after tax, 694,800. Minus the 208,440 gives you an answer of 486,360. Okay, so let's just recap that again quickly. Right, we started with the operating profit. Because that figure was given, we could automatically get the calculation or the total of the operating expenses. All we had to do, we had to take away the gross income minus the operating profit to give us the total. And I'm sure if we add all of these, we'll get 209,000. Okay. The interest income we take straight away from the trial balance. There was no adjustment to it. So we just have to add 781,500 plus 3,500 gives me 785,000. Then we had to calculate the interest expense, which was the loan statement. It says the opening balance of the loan minus the repayments. So the balance should have been 561,800. But the bank capitalized the interest, meaning that he added the interest to the balance to get to the final balance of the loan statement. Because the bank includes the interest and our trial balance doesn't show the interest. If you just have a look in your trial balance, it says mortgage loan 652,000, which means this figure is also given, but they didn't take into account the interest because the bank will tell you what's the interest that they're adding. So it's 561,800 minus 652, and the difference is 90,200. That was the interest expense. Then we just have to fill in the interest expense. So it will be 785,000 minus 90,200 gives me the net profit before tax of 694,800. The tax percentage is 30% of the net profit before tax, so that's the net profit before tax. The tax amount is 30%, so 30% of that gives me a total of 208,440. Then we go the amount before tax minus the income tax gives me the amount after tax, or I can just also calculate if that was 100%. And I can just calculate this 70% and then get the tax if I go the other way. Or in this case now it's 694,800 minus 208,440 gives me the answer of 486,360. Right, learners, let's just recap what we've done quickly. we've been working through an income statement. We've also been doing the note for fixed assets, which was this part over here, that we must still need to complete over here so that we can complete that. And we were busy with calculating the cost price of the item that was sold. So we have an asset disposal inside as a part of adjustment of an income statement. Okay, so it's the asset disposal part, the depreciation that we had to calculate on the item that was sold. We have the carrying value. Those figures we had to transfer, or we had to take it forward to the fixed asset note. So the depreciation over here will be the same amount as the depreciation that will be reflected in your income statement. Okay, so we have completed that already in the income statement. The depreciation in the income statement, 79,280. And then we can see the makeup of those figures. That was the one that was sold, and that was the remaining or the old vehicles. So the total depreciation is 79,280. So that will be 79,280. Put that in brackets, and then we've got that. Okay. Now there's 2 or 3 ways of getting this, the missing figure over here, and then we can determine the carrying value. Okay. So we can start with carrying value. We say 512,400 plus 200,000 minus 208,800 minus 79,280 gives me carrying value at the end of the year of 424,320. Carrying value 424,320. Right, so I have the carrying value at the end of the year. So 810,000 minus what gives you 424,000. Then I just take away the 810,000, and it gives you 385,680. Okay, so now we've completed the fixed asset note. It was just we had to fill in the depreciation that we got from the income statement, and that was linked to the first part of the question. We had to take away the cost price, we had to determine the depreciation, we had to determine the carrying value, which we also have in the fixed asset note. But then we had to do an income statement, which was just the sales minus the debtors allowance, minus the cost of sales that was given. The fee income was the 900 for the services that was rendered that was not according to standard. The profit on sale was given, that was by adjustment number 1. The rent was the one with the increase, where we had to have a look at the increase. Then what we did was we totaled, and then we got a total for the gross income. But because the question gave us the total of the operating profit and the missing total in between, 1,686,500, take away the operating profit, and then we got a total of 905,000. So that was the total of the operating expenses. Then we went through all those adjustments. We just carried the depreciation forward. Then we got a total, and then we just did the bottom part of the income statement. The interest income didn't have an adjustment, so we just had to add. Then we had to do the loan statement, which we did, which was this figure over here to calculate the interest. Right? And then we just had to calculate the before tax, take away the 30% for the tax, and then we had to calculate the 400, which was the amount of the tax. Okay? Then, learners, all I need to tell you is thank you for watching, thank you for taking note, thank you for the responses. Unfortunately, I see that we have just people from the Eastern Cape. I hope to shed some light on the difficult calculations that we are looking forward to when it comes to the grade 12 exams. Please make sure you master them, you make them your own, and everything of the best for the accounting exams. We know it's the March control that's coming up, and then if you wake up after that, it will be ready for the June exams. All I can say is work through old question papers, make sure you understand, compare your answers, and everything of the best for the upcoming exams. In 2 weeks' time, everything of the best. I'll see you then. Goodbye.